Hello to all cryptocurrency lovers and curious investors. Today we're going to delve into one of the most fascinating and potentially lucrative events in the Bitcoin world, Bitcoin halving. Imagine this, you're in a game where the main rule is scarcity. The less of something there is, the more valuable it becomes. Now, Bitcoin is not a game, but it does have rules, and one of the most important is its limited issuance schedule. What does this mean? Well, simply that there will only be 21 million Bitcoins in total. Yes, you heard that right, only 21 million. And every 4 years, a key event occurs that directly affects this scarcity rule, halving. So what exactly is this mysterious halving? Let me explain. When Satoshi Nakamoto created Bitcoin, he established a unique protocol for its issuance. Initially, miners were rewarded with 50 Bitcoins for each block they confirmed. But here comes the interesting part, every 210,000 blocks mined, roughly every 4 years, that reward is halved. Hence the term halving. In May 2020, we experienced the third Bitcoin halving. This means that the block reward was reduced from 12.5 to 6.25 Bitcoins. Why is this important? Because it reduces Bitcoin's inflation rate, making it even scarcer and potentially more valuable over time. It's like you're taking pieces out of a jigsaw puzzle, making the remaining pieces even more precious. Now, how does this affect investors? Well, there are several ways to look at it. First, halving has historically been followed by an increase in the price of Bitcoin. Why? Because it reduces the amount of new Bitcoins coming into circulation, which can create an imbalance between supply and demand. Less supply with steady or increasing demand tends to drive the price up. And while this is not a guarantee, it is a pattern that has occurred in the previous 2 halvings. Second, halving may affect the profitability of Bitcoin mining. With the reduction in the per block reward, some less efficient miners may become unprofitable and exit the market. This could lead to a greater concentration of mining power in the hands of large operations that can remain profitable even with lower rewards. Third, halving may increase awareness and interest in Bitcoin in general. As a major event in the cryptocurrency calendar, it often attracts media and investor attention, which can lead to increased adoption and investment. Now, what should investors do in the face of Bitcoin halving? Well, I'm not a financial advisor, but here are some common strategies people consider. 1. Hodling. Many investors choose to simply hold their Bitcoins for the long term, expecting the price to rise over time due to reduced issuance and increasing demand. 2. Buying during the downturn. Some investors take advantage of the market volatility that often precedes and follows having to buy Bitcoins at lower prices and potentially profit over the long term. 3. Diversification. Others choose to diversify their portfolio by investing in a variety of cryptocurrencies and other assets, rather than putting all their eggs in the Bitcoin basket. In summary, the halving of Bitcoin is a fascinating event that marks an important milestone in the history of this pioneering cryptocurrency. By reducing the rate of issuance and increasing its relative scarcity, it can have a significant impact on its price and the cryptocurrency ecosystem as a whole. For investors, understanding halving and its implications can be critical to making informed decisions about how to manage their portfolios in the exciting and sometimes turbulent world of cryptocurrencies. So there you have it, Bitcoin having broken down and explained. I hope you found this talk useful and informative. Remember, do your research, diversify, and keep up with the news in the cryptocurrency world. Until next time, folks.